Do you also feel that middle class in India is unfairly taxed higher?
We're the donkeys of the system. We have to go on pulling. But we all know that there are enough people who earn maybe more than us who get away by not paying taxes. Why are our roads choked? Why is the air bad? Why is the municipal corporation so corrupt? Free electricity, free. Like, why is my money going for free so much?
And lastly, what policy changes do you see coming?
I think this year, before the union budget, my expectation is that the Indian middle class will get a little bit of a breather. Although I don't think.
Welcome to a very special episode of Make Money Matter, India's smartest podcast on finance by HDFC Sky. I am your host Kritika. At Make Money Matter, we bring together some of the most renowned personalities in the world of finance, not only from the house of HDFC Securities, but from across the country. And today we are honored to have a true trailblazer with us, an author of a bestseller called Let's Talk Money. And she's also the chairperson of SEBI's Advisory Committee for Investor Protection and Education Fund. Please welcome Ms. Monika Halan to the show. In today's episode, we are deep diving into the world of taxation, upcoming budget, and hacks that you can use to save your hard-earned money. So, Monika, like I was saying, I have recently moved into another tax bracket, and the first question I got from my HR was, which regime should I register myself in?
Yeah.
So, what are your thoughts? Like, what do you suggest?
No, I have a question for you. When you were growing up, and there's the whole adulting thing that when I'm an adult, did you ever think adulting meant paying taxes, keeping paperwork?
I was shocked when I saw that I did not get my CTC actually.
Yes.
Yeah.
Yes.
And there was a significant deduction on that.
So, to all you young people, welcome to adulthood. It's a lot about filing taxes, doing paperwork, fixing leaking taps, and then, of course, having fun. But, so adulting is not what it's made out to be when you're growing up. We have two tax regimes right now. One, the old one, you get deductions, which means that if you make certain investments or do some spending, you pay less tax. Okay, so that is taken as they remove that much from your taxable income. So when you have a lower taxable income, you pay less tax. Okay, so that's the logic of a deduction. So the old regime allows you a whole list of 50 deductions, not all of them that you can take, but there are a whole lot of deductions that you take. There is a new tax regime which takes away most of these deductions. Some are still there. Okay, there's a standard deduction. There is on NPS, I think there's still something. So they've taken away 99% of them. So you've got to see the intent of the government is to move us all from this deduction-based approach, which gives jobs to a lot of tax consultant CAs, to a regime where you can file your tax return yourself. There are no deductions, and they say we will tax you lower if you onboard the new tax regime. In order to give people a choice, they've allowed old and new. So therefore, you are faced with this question. And no answer I give will satisfy everyone because each person's life is going to be different. The only rule is if you take a lot of deductions, which means you have a home loan, you have you're making your investments, you have medical insurance policies which also allow you that deduction, you have in that list of deductions, you are taking advantage of a lot of them, then the old regime is better. For most people right now, the new regime is better. And if I can predict which route the government will take, I think they will make it sweeter and sweeter for you to onboard the new one. So basically, why onboard something which we know will be discarded? Onboard the new one, hopefully pay a lower tax than you would have with the older regime. And I think the only other thing I can tell you is that it's very emotionally difficult to reconcile handing over 30% of your income to the government.
Absolutely.
But that's something you just have to reconcile to. Okay, there are countries in the world where there's no income taxation. They are either autocrats, despots, or there is some other problems with that country, or you are not able to become a citizen. There's, I think, can you go there? Most of us can't. We are in a country where there is this tax system. The faster we accept it, the better it is for us. Okay, so tax is a part of life. You can reduce it a little bit by doing some things. But I think just accept the fact that we have to pay taxes. The only other thing I can tell the young people is that find a way to make the government accountable. They are going to do the maths on how much you will pay the government over your lifetime. Then put pressure on the government to increase this urban mess that we live in. You know, you guys will have strong voices because you're the largest voting bloc. As an age cohort, the 20s and the 30s will be a very large age cohort. Put pressure on the state governments and the central government to improve the urban Indian experience. Like, why are our roads choked? Why is the air bad? You know, why is the municipal corporation so corrupt? So get them to use your tax rupee better than be squandered away on this mahila, that didi, that free electricity, free. Like, why is my money going for free so much? These are questions I think you have to ask. So first is emotionally understand tax to dena padega. What are they doing with it? Who are they giving it to? Why do they have things for free? Why is it that my money is going for free? I think you've got to get angry on that. Not angry that I have to pay tax, but angry on what are you doing with it?
With the taxes.
Yeah.
I feel we are more aware, but
Yeah.
when it comes to lobbying, I think
Yeah.
that's where we lose our footing a little bit.
Yeah. So find a way. You've got social media.
Yes, now we have social media,
Yeah.
correct.
Yeah.
So, do you also feel that middle class in India is unfairly taxed higher?
Data is the best way to answer a question. So you have less than 5% of the population who files tax returns. Less than half of those actually pay any meaningful tax. Okay, so there's a population, 2.5% maybe are paying taxes. That is direct income tax. Okay, I'm not talking. So you have two kinds of taxes. You have a direct tax on income and assets. Okay, so you have a tax on the income that you get and on the profits that you make. There are two kinds of taxes that you pay. These are called direct taxes, and there's a whole world of indirect taxes which now has collapsed into the GST. So I am talking of this universe of the direct income tax paying individual. We are very few of us, and we account for 19% of the union budget in terms of the total direct taxes. If that is your denominator, we are accounting for half of that. That's a very large number. There's a disproportionate burden on the person who's unable to escape the tax net because you're in the organized sector. But we all know that there are enough people who earn maybe more than us who get away by not paying taxes. So I think the challenge really is for the government to get the people who are not paying to pay. And one thing which is politically very difficult, I don't think any government can do it. It is politically difficult because, again, of the large lobbying power. There's one study long back by NIPFP which calculated tax foregone on agriculture income. I think you would all know that agriculture income is not taxed. So this economist said that, okay, the non-poor agriculture income earner, so he has his metrics to basically say that people who have income above your tax threshold. He did that and he found that the money foregone was 85,000 crore. I did the numbers again using his methodology. Tax foregone is about 2.3 trillion rupees. Okay, 2.3 with like 12 zeros behind it. Okay, 223 with 11 zeros behind that. That is the tax foregone of the non-poor Indian farmer's income. Now, who's going to ever tax this? So we pay more because they don't pay. We pay more because all the people who are doing informal sector work or business guys who are able to get out of not displaying their income, I'm sure you'd have gone to buy something and you're using your card. Okay, it's a high value purchase. Person next to you is taking out a wad of cash. Now you tell me, who carries cash today?
Nobody, rarely.
No, there are people carrying cash. They are the people who are not paying taxes. So sometimes I actually feel like I want to say that did you pay tax on this money? I think they'll beat me up. But, that angst is there that why am I? So I have paid taxes. My tax paid money is buying this. And here is this person comes with this VAT and is able to buy 30% more than I can just because he or she is not paid taxes. So I think the government has to find a way to expand the tax net. Okay, it's not enough to wait for everyone to onboard the formal sector organized job. India works on its informal sector. You have to find a way. There was this Panipuri guy in Chennai whose UPI transactions showed a annual income of 40 lakh.
Wow.
Okay, it's more than what a average 25-year-old
Yeah, time to switch jobs.
work is doing, right? But try taxing that person. There'll be so much of, poor guy, look at him. He's not poor. He's earning 40 lakh. Of course, he's working hard. That's fine. But, is there a way to get over this whole bichara trope that we have? वो बिचारा है नहीं बिचारा नहीं है उसके पास 40 लाख है आपके पास नहीं है so I think those are the challenges. Yes, there is disproportionate burden on the middle class, which is paying taxes. They have to find a way of making it fair because look, you're paying taxes, but where is this going? And again, unfortunately, the center collects these taxes, but the states spend it on education. Those are state subjects: police, education, health. So there's a study, an economist has done this research where he found that at a given time, about 50% of the government school teachers are not teaching. And they are highly paid professionals. 25% of the doctors and nurses don't turn up in the government health centers in the states. So my tax rupee is going, it's becoming salaries. And then the game is up a notch. So salaries are not enough. My tax money is not enough. For anything that you deal with the government, there's a bribe to be paid. Right? So the bribes are a part of. So not only are you squeezing me on my taxes, but when I intersect with the state, there is so much of rent seeking. So I think there is middle class anger bubbling up and they need to do something about it.
So I want to steer the conversation a little bit to what I, as a taxpayer, can do to save taxes.
Right.
I know about the ETC deductions that I can take advantage of.
That's part of the old regime. In the new regime, you won't have it.
Yeah.
Yeah.
But what apart from that can you do to make
Very little, actually. I mean, there is, other than ATC, there is the medical insurance. When you buy, you get a deduction on that.
Yeah.
On a home loan, the interest up to a certain amount is a deduction that you get, which is not part of ATC. The principal of the home loan is part of ATC.
Okay.
Interest is out of that.
Yeah.
If you take home and you don't live in it and you rent it out, the entire interest is tax-free. It comes as a cost. So those are all these nuances that you can do. But then, I said that real estate is a bad investment, so don't do that. But since this is tax, yes, you can get that as a deduction. There is very little actually that you can do to reduce your tax burden. And on the GST side, you can eat more at home.
Yeah.
Because the GST incidence is lower. Okay? Then should you be buying something from outside and then paying a higher GST on it?
Correct. So
but other than that, there are very little avenues of escaping this.
Correct.
Yeah.
And between NPS was something that was not a long ago introduced, right? So
2009.
2009, right?
For the private sector.
For the private sector. Okay. So I got to know about NPS pretty recently.
Okay.
And between PPF and NPS, what do you think are the differences and what should one opt for?
So the Public Provident Fund is a scheme which allows you to collect at the moment 1.5 lakh a year with a guaranteed return, which is tax-free.
Okay.
On that 1.5 lakh contribution, you get the Section 80C deduction.
Yeah.
Right? So it's exempt at that. The interest which accrues is also exempt. And the final corpus that you get is also tax-free. So the PPF, it's a 15-year product. It's one of the best long-term corpus-building, zero-risk, guaranteed tax-free products out there.
Yeah.
Especially for people who are new to investing and are unsure of capital markets, of equities. This really becomes your core of your portfolio for long-term. So that's the first statement is PPF is great for your long-term safe core of your retirement portfolio. Second is if you're already in a provident fund, you don't need the NPS. The NPS is there for the unorganized sector worker who doesn't have access to the employees' provident fund, which is again a government scheme where they announce the return, which is also tax-free all through. You get your deduction, the interest is free, and what the corpus that you get at the end is free of tax. So if you have your PF, don't do NPS. If you don't have PF, NPS becomes a viable choice. I would complete my PPF contribution because NPS is a great scheme. It's low cost. It's fantastic. But you're also investing in markets. Because you've got to choose whether you're choosing a government bond, corporate bond, equity, or a life stage fund. A lot of decisions to be taken. Are you able to do it? You should be able to do it. So that's your first hurdle is the ease of onboarding. Do you know what you're doing? In terms of construction, it's fantastic. The costs are the lowest in terms of their management costs. But do you know what you're onboarding? Like, what is the point if you're buying a government bond here when you're getting in the PPF, whatever rate they announce? That's the first problem is the choice. The second is on vesting. When you, I think it's 58 or 60, one of the two. At that age, 60% of the corpus you get tax-free. 40% you have to compulsorily buy an annuity from an insurance company so that you get an income every month. So you lose control of 40% of your money at the time of retirement. For some people, it may be a great idea that the insurance company will give me an annuity. The annuity market in India right now is not very well developed. Okay? I don't see very good products. It might change over the next 30 years. My one problem remains that I would rather not give up control of 40% of my asset. In the PPF, I'm getting control of the entire money. So for a person who's able to decide for myself, I like that. There could be a person who might want, they may say 40%, nahi, the entire 100% I will buy an annuity because I don't want to make these decisions. I will just buy an annuity and enjoy that income for the rest of my life. So I'm giving you choice sets in front of you depending on the way that you function. So if you would like full control of your money, then it is the PPF and the EPF. NPS, you lose control of 40% of your money.
Correct.
So those are the broad differences.
Understood.
Yeah.
So we also spoke about investing at length previously. And there is one form of taxation which is called capital gains. So how do people who are starting their investing take care of that?
You can't. So we are on the verge of the direct tax code for India being redone. So the government is going to be announcing, by the time this is out, maybe it's already announced. As of the date of recording, we don't know what the new direct tax code is going to be. Like I said, direct taxes are on income and on profit. The income can be from the work that I do or from the asset that I have. The asset could be a fixed deposit. The interest is income. It's taxed on my income slab rate. The rent that I get from property is taxed at my income tax slab rate. Profit is the difference between buying and selling price. This is also divided into short term and long term. This definition of short term and long term has been different for all the assets. Equity goes long term at 1 year. Real estate, they moved it from 3 years to 2 years. Debt products, now the difference between, they've taken away for some reason, I cannot fathom, of the difference between long and short term capital gains on listed debt products. Very strange. But that's what they've done. Basically, if you hold long term, you pay less tax. So the current rate is, I think, 12.5% of the profit if you hold equity for a year. And your first 1.25 lakh is tax-free. So taxation, you will understand, is like there's just too much fine print. There is always, the tax book is this thick. If you are somebody who's redeeming your, say, equity fund, what you need to know is that the first 1.25 lakh is tax-free. Again, these could change on 1st Feb when the FM announces her budget. What I have found is that you should look at your own goals rather than make investments basis taxation, because these rules keep changing. People go in this direction because there's less tax here, then the government changes that rule. Your money is stuck. So you make your investment decisions and take the burden of tax as it comes. There's very little tax planning that you can do, for the government will go on closing the loopholes. So again, are you going to spend your entire time doing this?
Nobody has that kind of.
So stop worrying about it. Make your investment decisions. Do your basic allocation between debt and equity. For retail investors, please just go through mutual funds. It is designed for retail investors. The rules are very, very strict so that the fund houses cannot get up to funny business. Basically, it should just be very, very simple. So all these getting the best out of the tax regime might work in 1 year, but it might not work in the next year because they might just change the rules. So as of today, equity still is the lowest tax long-term asset in the market.
Got it. And lastly, what policy changes do you see coming to give us relief of some sort of taxation?
I think this year, and again, as we record before the union budget, my expectation is that the Indian middle class will get a little bit of a breather. Although I don't think they can do too much. Simply because the tax net is not wide enough. So should it be wide enough, it could really drastically come down. But in the absence of that, and these are very difficult political decisions to touch a voter base like farmers.
Yeah, very important for all.
Very difficult for any government to do. Free electricity, free water, no taxation. Still productivity is low. So there are a whole lot of problems with all of this subsidies and free stuff being given, and agriculture being in the condition that it is. So my expectation really is that they might tinker a little bit with the rates and all, but drastic changes, reductions is not something that the middle class should aspire for. We're the donkeys of the system. We have to go on pulling.
Yeah. Thank you so much, Monika, for being with us here on the show. And thank you so much for giving us all this insight. And if you like this episode, don't forget to like, share, subscribe to HDFC Sky.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.